For as long as humans have existed, we've known one simple thing: water is life. But now, Wall Street has a different word for it: an asset. You see, something is happening kind of quietly behind the world's trading screens, and it's a revolution that touches every single one of us. So in this explainer, we're going to unpack exactly how that happened.
For the very first time in history, water can be traded on the open market, just like oil or gold or stocks. And this huge shift, it forces us to face a question that's older than civilization itself. Should anyone, anywhere, be allowed to profit from thirst? And that, right there, is the fundamental conflict we're digging into. It's this incredible journey from worship to Wall Street, from seeing water as the sacred source of all life to seeing it as just another number on a spreadsheet. Yeah, before water ever had a price tag, it was worshipped. The first great civilizations didn't just use water, they were literally built around it. They understood it was the foundation of, well, everything. What's really fascinating here is how these ancient powers show that controlling water meant creating order. I mean, for the Sumerians, irrigation wasn't just farming, it was the blueprint for their cities. For Egypt, the whole rhythm of the empire was tied to the Nile's yearly floods. And in Babylon, water was so crucial that stealing it was a crime punishable in one of the world's very first legal codes. Okay, now let's jump forward to Rome, because this is where things get complicated. Rome was really the first to create a truly monetized water system. On the surface, you have these incredible aqueducts, a symbol of public good, of an empire providing for everyone. But the reality on the ground? It was a different story. Almost immediately, a system of inequality popped up, where the rich and powerful diverted water to their private villas, while everybody else had to wait in line at public fountains. And for centuries, that Roman pattern kind of just held. But then the Industrial Revolution changed everything. This was the moment that water's true commodification really began. It stopped being seen as something divine and started being seen as something, well, merely useful. You see, as cities like London and Paris just exploded in size, so did the need for clean water. And guess who stepped in to fill the void? Private companies. This is where that modern pattern of public need, private profit was really born. In London, they built the infrastructure for the wealthy neighborhoods first, leaving the poor to drink from contaminated wells. And over in Paris, massive companies took over, companies that would eventually become the water giants we know today, like Veolia and Suez. And this right here, this is the crucial turning point. This wasn't just about building pipes, it was a complete conceptual leap. Water went from being a shared resource, something that kind of belongs to everyone, to being a service. And as we all know, services have profit margins. So this whole idea of water as a service to be sold, well, it was taken to its absolute extreme in the late 20th century. And one city in Bolivia became this global warning for what happens when that logic goes way too far. So back in the 80s and 90s, big global institutions like the World Bank were pushing this idea that private companies were just more efficient than governments, and they pressured developing nations to privatize their water. In 1999, Cochabamba did just that. The results? They were immediate, and they were devastating. Prices tripled overnight. We're talking about families earning less than $100 a month, suddenly facing impossible bills. Can you imagine having to choose between water and food? The new owners even made it illegal to collect rainwater. So the people revolted, and the contract was torn up. And while that victory in Cochabamba was local, it proved a much bigger global point. Water was now officially a commodity that could be controlled, sold, and fought over. This physical battle over pipes and taps, it set the stage for a totally new kind of fight, one that would happen on computer screens with algorithms and contracts. You know, after what happened in Cochabamba, it was really only a matter of time before high finance got involved. In the world of capital, if you can measure something, you can trade it. The question was no longer if water would become a financial product, but how. Okay, so to understand the how, we first need to get the lingo down. And the key term you need to know is the acre foot. It's actually pretty simple. It's just the amount of water it takes to cover 1 acre of land in 1 foot of water. This became the basic unit they could trade, kind of like a barrel of oil or a bushel of wheat. So how do you turn water into a financial product? Well, it basically happened in 3 steps. First, an index was created to track the real-world price of these water rights in California. Second, in December 2020, the biggest derivatives exchange in the world used that index to create something called a futures contract. Just think of it like a binding agreement to buy or sell water at a set price on a future date. And third, and this is the big one, this opened the floodgates for investors to start buying and selling these contracts, essentially betting on which way the price of water will go.
Now, the people who support this say, hey, it's just a tool for farmers to manage risk, to lock in a stable price. But the flip side is that it also opens the door for pure speculation on the most essential resource we have. Which, of course, brings up a really critical question. Who exactly is doing all this trading?
So let's look at that final piece of the puzzle. The players who are making these bets, the global consequences, and the really deep ethical debate that this whole new market has kicked off.
So the answer to that question? It's not the farmers. The people trading these contracts are overwhelmingly big institutional players. Hedge funds, asset managers. They're looking for what they call exposure to natural resource volatility. Let's be really clear about what that means. With climate change making water scarcity a more predictable problem, they are, in simple terms, betting on drought. Because when water gets scarce, the price goes up and their investment pays off.
And the biggest names in finance, they are not being shy about this at all. You have firms like BlackRock calling water the new gold. Goldman Sachs calls it the petroleum of the 21st century. For them, it's not about life, it's about the return on investment.
So here are the 2 sides of the argument, laid out plain and simple. Proponents insist this is just a rational tool for managing risk in an uncertain world, but critics are warning that we are turning human survival into a speculative casino chip, creating a system where profit is directly tied to scarcity. Of course, you could argue that putting a price on necessities isn't anything new. I mean, markets have found ways to do this for centuries, from spices to energy to oil. So, in a way, water is just the next step in a very long historical pattern.
But there is a massive difference this time. A really big one. You can replace coal with wind, you can replace gasoline with batteries. There is absolutely no substitute for H2O.
And this really captures how the very nature of control has changed. The old way was physical, right? You'd have armies guarding a river. The new control is completely abstract. It's lawyers writing contracts and investors drawing graphs on a screen.
So when you boil it all down, Wall Street's new bet isn't actually on water itself. It's on us. It's a bet that we as a society will eventually accept a world where the most fundamental element for survival belongs only to those who have the deepest pockets.
And that brings us to the final unavoidable truth in all of this. You can trade it, you can price it, you can build all the complex financial models you want around it, but at the end of the day, the final rule of finance is exactly the same as the first law of nature. You can't drink a futures contract.